top entry strategies and how to enter the deal correct. So here you can see is a strategy for money, and on the right side of the chart you can see factors what you need to see and types of entering a deal. And on this chart example I will show you them all. And don't skip the video, because at the end of this video I'm gonna show you the source where you can grab all the trading materials for your trading career and increase your win rate. So what we can see on this chart, some movement is here, we can see liquidity here, and if you get information from previous videos you can define some FVG here and order block. So let's begin part by part. Let's begin from liquidity sweeps. How to enter from liquidity sweeps? You need to define the huge amount of liquidity on the chart and wait for capturing, for example here and here. Let's think what we don't see this part of the chart, for example like that. And what we need to define to enter from the liquidity sweeps, the first thing is our trend. For example here we can see the breaking of structure and forming of uptrend after capturing and establishment after this upside movement, and the huge liquidity which are found here. And here we can see liquidity which were grabbed, and after that the order block formed. And what we need to see here, what we need to understand here, it's the price now has two pools of liquidity on the up and on the bottom, and if we are gonna follow by trend, here we can see an uptrend. So we are waiting for grabbing bottom liquidity because the price needs the power to continue the movement or for the reverse. And what we need to do, we are already defined what it has an uptrend. We are detecting this point of interest zone from which we are gonna enter. We need to place a long position with the liquidity sweep on the top, because if it has an uptrend price, we're gonna grab the bottom liquidity and after we continue uptrend movement. So the scenario we're gonna look like that. It is the first example of our uptrend movement and grabbing of liquidity, because here we have our break of structure, after that the price grabs the liquidity. Here this scenario has most chances to success. But if we are gonna look at the price, if it's captured the liquidity on the top here after we opened the deal like that, and after that it's returned to our liquidity sweep and order block zone, and after that get our correction in this to this means we can trade the sideways movement, and it is in our type of trading. So what we need to trade our sideways movement, we need to define the overall trend of the price. It is downtrend or uptrend, because the real trader don't trade against the trade. It is a great way to lose all your deposit account. So we need to define our trend, after that define our sideways movement. So here we can see we are take our Fibonacci grid and define premium and discount market and our sideways movement liquidity pools. So what we need to see to trade a sideways movement, we already defined our trend, and you need to find our point of interest zone before sideways movement, because here we can see after the big impulsive movement we can define institutional FVG or institutional order block on the higher time frames from which our price going to reverse. So if we have uptrend movement, we are waiting for the correction, grabbing of this liquidity, because the price are always going to grab the liquidity, and the scenario are going to look like this. In the sideways movement, there is no way that the price didn't grab the liquidity. If the liquidity, if uptrend grab this liquidity here, for example, like that, before the price at the bottom grab this liquidity, it is 99% of the reversal of the price. It is not gonna continue its movement like that. More percent of the chances is well, the price are going to drop down. After that, grab this liquidity, fulfill our FVG or point of interest zone, and after that going, for example, here, and like that. If we have a downtrend movement, we are waiting for the price grab liquidity on the top, and after that go down. So here we make some different movements. We need to see the point of interest zone on the top of our sideways, and the deal are going to look like that. Place your stop losses after the point of interest zone and take profits on the liquidity. So, and the best ways to enter the deal is from FVG and order block. For example, here, we can define our order block here, because the price grab the liquidity and after that the impulsive movement come after that. So we can define it like order block, and it is situated in our optimal trading entry point. And what we need to do, we are defining our order block, and to enter a better deal with good risk reward ratio and get a better confirmation, we need to drop down in time frames. If we now look and place our order block on the 1 day time frame, we need to go to the 4-hour time frame and afterwards see some confirmations where I'm going to show you it's on the real-time chart. So the deal are going to look like that. I told you about order blocks, how to define them, how to open the deal from them. In the previous videos you can go to my channel and see them. And with fair value gap, it works the same way. The most hardest thing, you need to define trend and fair value gaps from which you can enter a deal. Well, now let's move to the real chart examples and open some very good deals. So it is example of entering from the upside, from the sideways movement. Here we can see our sideways movement. On the time frame it is very short, but if you drop to the lower time frames you can see what it is very long deals on smart money traders. So we are taking our Fibonacci grid, move it from here to here. Let's move to that meanings. We are defined our FVG here. FVG here, we have some downtrend movement because the price grabs the liquidity here. After that, the candles capture these meanings, and here we can see our vehicle structure. We defined our short of the block, and here you can see our liquidity pool. We need to enter from that stop loss. Our order block, it is very risky stop loss, but you can place it higher and take profit on the bottom of our liquidity pool and trade a very good sideways movement. We need to wait for the capturing of liquidity, full filling of our point of interest, and after that fix your money. So action is very good. The deal are going to look like that. So we don't move too far. Here we can see our FVG formed here and our FVG formed here. We can use our Fibonacci grid tool. I recorded videos about how to use Fibonacci retracement. Place it like that to see our optimal trading entry point. So we are going to wait. We are waiting our price to return to these meanings and open a short position because it has a short movement trend. Place stop loss very safely and take profit on the capturing of liquidity. Let's correct it and see what are going to happen. So the price didn't return to our meanings, but sometimes this deal are going to happen. Here we can see our FVG. Let's follow the same instructions. Place the Fibonacci retracement tool. We can see what FVG are situated in our optimal trading entry point and this FVG tool and here we can see the order block formed. From this order block we can enter a deal. Yes, you can say it is a backtest, but the backtest is our best friend because you need to learn how to trade on the backtest. So here we place a deal of on the capturing of liquidity here, and it is very good example how to enter from the order block. So with liquidity sweeps is too long, and we have slower chances to get the deal from that. And after the price test order block, grabs the liquidity here, it has some power to up and movement, and we can return to our FVG and open a deal like that or like that. So we are waiting for deal in these meanings. So the price get our deal and we are waiting what are going to happen. Very successful deal. If you get risky stop loss, you can get a huge amount of profit. And here we can see very interesting deal. The FVG formed the trend broke and it has a bullish movement. Here we place our deal on the highest point of the FVG and very successful deal. So on this example we can see a new order block forming. What we are going to do is define our order block and place a long deal like that if the safety stop loss. But what's wrong in this deal? We don't have a very good take profit point because here it is too far. Yes, it is grabbing of liquidity. I really didn't recommend you to enter the deals like that. Let's make it to 1.3 risk reward ratio and look what are gonna happen. So here's the price grab down and very successful deal. So what I can tell to you, the smartest viewer already defined what all types of entering the deal works on the same way. We are waiting for the point of interest zone, we are waiting for the liquidity sweep. So you can just cut one type from another. This work in symbiont way work together. You can't cut the liquidity sweeps from the FVG because the liquidity is one of the most important things in the smart money trading, like FVG and like order block. It's three most important ways, and the sideways movement trading works on the FVG trading and liquidity sweeps trading. So learn these types of trading, learn how to enter to deal, follow my Telegram channel where I'm gonna drop all the trading materials and teaching materials. See you in the next videos. Bye.